Hello everyone. This is going to be probably a slightly longer video than usual because there's been some really exciting real estate news over the past month. So aside from the normal stats that I always talk about, I'm going to talk about some new mortgage rules as well as an initiative the government just announced to encourage the building of more secondary suites, which will then become more rental inventory. Let's start off with the stats. And so when we look at active listings and new listings, active listings year over year, there has been an increase in active listings for each of the past 6 months. They were up as high as 82% in May of this year, and then has sort of receded, and in this past month in September, they were up 32%. And new listings have reacted very similar, with the exception of August, where new listings actually declined a little bit on a year-over-year basis. In the other 5 months of the last 6, there's been an increase in active listings. They were up as new listings. They were up as high as 52% in May, but then the new listings were only up 9% year over year in this past month in September. And while sales volume has increased 4% year over year, the sales to new listing ratio has declined for each of the past 6 months. And generally speaking, when you have such an influx of active listings and new listings, and a deterioration of the sales to new listing ratio, you'd expect prices to come down. But that hasn't really been the case. There's been some fluctuation in prices throughout the past year. At the end of September, prices were only down 0.5% year over year. And if you break it down even further, condos were down 1.5% year over year, detached homes were down 2.2% year over year, but semis were actually up 1.4% year over year. Semis was also the only category where we saw an increase in the average list price to sale price. It was over 100% and sat at 105%. That means on an average, semis were selling for 5% above their listing price. And so when we see an increase or a strong percentage of the list price to sale price being 105, as well as an average price increase, it just goes to show further again that those entry-level semi-detached homes in Toronto are still the most competitive and still very highly desirable. It would appear that buyers and sellers are still at a stalemate. Sellers are reluctant to lower their prices any further, and buyers are still fearful to enter the market. And past history will show us that buyers don't usually buy at the very bottom of the market because they don't know when the bottom is, and they're fearful. It's just human nature to stay on the sidelines until some positive news starts coming. So I would expect that as interest rates continue to decline in the new year, we'll start seeing more of those buyers come back to the market, and that will result in an upswing of both average sale price and sales volume. So that was the stats. Now let's move on to the other things. And the very first thing I want to talk about is the new mortgage rules. And there was 3 of them that were quite big. The first one is borrowers will no longer have to qualify for a stress test when they're renewing their mortgage. So previously, at the end of your 5-year term, if you want to switch lenders, you had to re-qualify for that stress test. And the stress test is always 2% above your negotiated 5-year rate. And over the past 2.5 years, we've been in a very high interest rate environment, as you know. And so, where interest rates sat in that 5 to 6.5% range, that meant that borrowers had to qualify, between 7, 8, 8.5%, which was nearly impossible for most people. And their lenders knew that. So their lenders were not offering them competitive rates when it came time for them to renew. Now, borrowers at the end of their term will have the option to shop around to different lenders and not have to requalify with the stress test, which will create more competition in the mortgage market and should help bring down rates and give borrowers a little bit more borrowing power. That was the first change. The second change is that CMHC will now insure mortgages up to $1.5 million. And as a quick refresher, anyone who's not putting down 20% has to get mortgage insurance. And previously, that was capped at $1 million. So we would often see homes selling for $999, $999, just below that $1 million threshold. And it sort of created a false bottom of that entry-level freehold market right at $1 million. Now, CMHC will insure mortgages up to $1.5 million, which will likely lead to a boost in that bottom. And the last announcement was that The 30-year amortization has now been expanded to people who are not putting 20% down. So any first-time buyer or anybody who buy a new home with an insured mortgage can now have 30-year amortizations. So these longer amortization periods and the ability to insure mortgages up to $1.5 million will likely give buyers more borrowing power and more options as the Toronto market continues to recover heading into 2025. And the last thing I want to talk about today was a new initiative the government just announced this week to encourage the building of more secondary suites. They are going to allow homeowners to refinance their properties and use that equity to then go build a secondary suite, which could be a thing like a basement apartment, a garden suite, a laneway suite, or even a duplex above their existing home. So here are some details of that program. The maximum loan to value ratio is 90%, which is huge. So if you have a home right now for $1 million, let's say, and you want to build a garden suite that's estimated to cost $500,000, that's $1.5 million in total new value. The government will allow you to refinance your home up to 90%. So 90% of $1.5 million is $1.35 million. You can then take out all of the rest of the equity to use to build that laneway suite. The next rule that they have is the max amortization period on that loan to build those secondary suites is 30 years. A homeowner can only build up to 3 additional units. Each unit must be self-contained, and these new units cannot be used for short-term rentals. So it's a great program. I'm really into accessory buildings. I live in a laneway suite. I try to encourage my clients to have basement apartments. But I think it's huge and it's going to help people. Let's just take a quick example that if you had a home that's worth $1 million right now and you want to build a basement apartment, even if you had to underpin your basement and then finish it, you're probably talking $250,000 to do that job. So, you're going to have to pull out $200,000 of equity, which might, today's carrying cost is going to cost around $1,200, $1,300 a month. But you'll bring in, $1,500 to $1,800 a month in new rental income. So you've offset that debt servicing, and you're actually going to make a little bit of money and add a lot of value to your property for future resale. So it's a great program. This is a quick snippet of it. I'm happy to talk in more detail. I'm going to share some links that people can read a lot more about it. But it's a great program. Hopefully you'll read up on it, and hopefully a lot of my clients will take the government up on this new program. Anyways, for now, that's it. Thank you for watching this long video. Thank you for always reading my newsletters. If you have any specific questions, feel free to reach out anytime. Until the next video, thank you very much. Happy Thanksgiving to you and your families. Bye-bye.